Today we are talking about the massive stock market crash in India that happened on February 28, 2025. The market took a wild dive and investors are freaking out. Let me break it down for you. What happened, why it crashed, and what it means for you. Alright, here's the scoop. On February 28, the Indian stock market dropped hard. The Sensex dropped 1,414 points, that's almost 2%, closing at 73,198. The Nifty 50 fell 420 points to 22,125, also down about 2%. In just one day, investors lost nearly 9 lakh crore rupees. Now that's insane. Mid-cap and small-cap stocks got hit even worse, dropping over 2% each. IT and auto stocks down as much as 4%. It was a total bloodbath on Dalal Street. If you are new here, let's do a quick recap. Shares are tiny pieces of company you can buy. If the company makes money, the share prices goes up and you make the profit. If it flops, the price drops and you lose the money. The Sensex tracks 30 big companies and the Nifty follows 50. When these numbers fall, it means the market's in trouble and your money will fall. So why did this happen? Because there's a lot going on. First, Donald Trump's tariff threats are spooking everyone. He's pushing a 25% tax on imports from Canada and Mexico starting March 4, plus an extra 10% on China. Now he's even talking about tariffs on Europe. Investors are worried this could spark a global trade war, hurting companies everywhere, including India, especially IT firms since they make big money from the US. That's not all. India's latest GDP data was due out soon and rumors say it might show slower growth, maybe just 6% for Q3. Now that's bad news for companies and stocks. Plus, foreign investors called FIIs are pulling out cash like crazy. In February alone, they sold over 47,000 crore rupees worth of Indian stocks. Why? They are shifting money to the US and China where markets look hotter right now. Add weak company earnings, Nifty profits grew only 4% this year, and a strong US dollar making the rupee weaker. Let's talk the impacts. IT companies like Tech Mahindra and Wipro crashed up to 6%. They rely on US clients, and Trump's tariffs could hurt their businesses. Auto stocks like Tata Motors fell 4%. They have already dropped 35% in 5 months. Asian Paints and Power Grid also took big hits, down 32% and 30% since last year. Investors lost a staggering of 48 to 50 lakh crore rupees in the last 40 days. That's like wiping out a small country's economy. Now this isn't just India's problem. US markets also dropped. The S&P 500 and Nasdaq dropped over 1% after every week jobs data and tariff fears. Japan's Nikkei fell 3% and even Bitcoin crashed 4%. Everyone's feeling the heat. Experts say if Trump keeps pushing tariffs, prices for everyday stuff like phones or cars could rise, hitting your wallet too. So what's coming? Analysts say this could get worse even before it gets better. Nifty might drop to 21,500 soon, that's another 600 points down. Sensex could lose another 1,000. Some think relief might come in March or April if GDP data improves or Trump backs off. But for now, it's a roller coaster. If you are investing, experts say stick to the big safe companies, think banks or pharma, and avoid risky small stocks. That's the latest on this crazy crash. What do you think? Is this buying opportunity or time to wait? Let me know in the comments and smash that like button if you found this helpful. Subscribe to Daily Salar Digital for more updates and I'll see you soon in the next one.